Is it better to partner with a giant or maybe be one yourself? For PayPal, well, the answer might actually be both. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're diving deep using our research captured on September 18, 2025. We're dissecting the digital wallet of the market, PayPal, ticker PYPL. Our mission, as always, is to cut through all that market noise and really understand what's happening beneath the surface with PYPL right now. So we're going to set the stage, look at the big news around PayPal, check the market's pull sentiment, technicals, and then wrap up with a strategic outlook. Okay, let's start by setting that stage, the bigger economic picture. What's the market waking up to this morning? Well, futures are pointing green, pretty solid open expected. The Nasdaq's actually up nearly a full percent. Feels pretty positive to start.
It does feel like a sunny start, yeah.
Yeah.
But if we connect this to the bigger picture, the economic outlook, still a bit hazy, I'd say. We're still seeing reports of slowing US GDP growth. The UK recovery still looks fragile. And we've even got some banks starting to trim their prime lending rates. That often signals caution. Plus, keep an eye out. Upcoming jobless claims data later today could easily shift this morning's good mood. So it's a mixed bag out there, context-wise.
Right, a mixed bag indeed. So that's the broader weather report. But what about PayPal itself? They've just dropped some pretty major news, haven't they?
Exactly. Huge news, actually. PayPal announced a multi-year strategic partnership with Google. They're aiming to, and I quote, revolutionize commerce, probably using some pretty cutting-edge AI for shopping experiences. And this comes right after other moves, like new peer-to-peer payment links, expanding crypto transfers. They're definitely innovating. But what's fascinating here is the conflict this creates. Our discounted cash flow analysis, it actually suggests PYPL is significantly undervalued. We're seeing a potential value over $91 a share compared to where it's trading now, around 68.
Wow, okay, 91 versus 68. That's a big gap.
Yeah.
But Wall Street analysts seem incredibly cool about it, don't they? Almost indifferent.
They absolutely are playing it cool. A full 50% rate the stock will hold. And get this, over the last 3 months, buy ratings have actually decreased. So this pause from analysts, despite such, potentially huge news, it's intriguing. Maybe they need more concrete details on the AI stuff. Or perhaps they're still weighed down by past performance, not fully buying into the future potential yet. It really begs the question, is this Google partnership a game changer the analysts are overlooking? Or are they seeing risks we need to consider more closely?
Okay, well, let's try and gauge the market's pulse directly, Dan. See what the crowd thinks. Let's look at sentiment through the options market. What's the story there?
Oh, it's quite a story. The put-to-call ratio is stunningly low, 0.18. Just to clarify, that means way more bullish bets, the calls, than bearish ones, the puts. It's like a stampede of optimism in the options market. We're seeing really heavy call option volume right at the $75 strike price. The bearish bets, fewer, but they're clustered around $60. And short interest, it's moderate, 3.24% of the float. Not extreme either way.
All right, so the options crowd is clearly betting on upside. But let's look under the hood at the price chart itself. What's the technical story, without getting too bogged down in jargon?
Sure. So, look, the stock is still fighting that long-term downtrend. That's undeniable. Recent prices are below those longer-term moving averages. However, there's been some interesting sideways movement lately. The price seems to be coiling up, winding tighter and tighter between about $66 and $70. And just yesterday, actually, a very short-term technical indicator flashed a buy signal. So signs of life, maybe.
Okay, coiling up. I like that image. But here's where it gets really interesting for me. Despite that long-term struggle, the volume and momentum seem to be telling a completely different story in the short term. Yeah.
They absolutely are. Money flow. Think of it like the tide coming in or out for the stock. It's definitely turning positive now. A key indicator we watched signaled a bullish reversal that suggests smart money might be quietly accumulating shares down here. And yesterday's price jump happened on really high volume, pushed it above a critical level, the volume-weighted average price, basically where most shares have traded hands recently. And momentum just flipped positive too. That downward force seems to have just faded away.
Okay, faded away.
Ah.
And what about volatility? What's that piece of the puzzle telling us?
Well, what's fascinating there is that volatility has been low. And not just low, but contracting for weeks now. Think of it like a coiled spring, just building up energy. This often happens right before a stock makes a sharp, sudden move. It feels like it's getting ready for something.
Okay, a coiled spring. So bringing all these pieces together, the macro haze, the analyst caution versus this big Google news, the bullish options, and these technical shifts. What's our strategic outlook for PayPal then?
Right, putting it all together. Our final analysis for PayPal leans towards a cautiously bullish outlook. The caution comes from, well, the primary risks. That unbroken long-term downtrend is still there, and the broader economic weakness we talked about earlier could bite. But the bullish lean comes from the Google partnership that's a potentially massive catalyst, and it's validated, by that extremely bullish option sentiment we saw. Plus, there are clear signs of a technical reversal brewing. We've got the strong volume confirmation, that low volatility suggesting a breakout, and the fresh positive momentum signals. The pieces are starting to align.
Okay, cautiously bullish. So for listeners watching this closely, what are the key levels they should really be keeping an eye on?
Okay, key levels. Bulls really need to see PayPal break and hold above that $70 resistance level. That's the key. If it can do that, it opens up a clearer path towards $75, where all those call options are sitting. On the flip side, bears are watching support around $66. A decisive break below 66 would pretty much invalidate this bullish thesis, at least for now.
Got it. 70 up, 66 down. So to leave you with a thought, PayPal is trying to write a whole new chapter here with Google as a pretty powerful co-author. The market seems to be betting it's going to be a bestseller, but, well, as any writer knows, that first draft is always the hardest part. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.